Is this the end of the bull market or just the beginning? Political, geopolitical risk, tax reform. So much to talk about. So stay tuned and let's get started. Hello, this is Michael Loftus for Wealth and Wisdom TV. First up, don't forget to subscribe to our channel. Also, click more for additional information about today's video, as well as access to my calendar and how to contact us. Also, up here in the corner, I'm sure Michelle is showing a link to this past weekend's Weekend Wisdom video, which was about life insurance for young families. So first up, let's get right to the numbers. Week ending 12/1. Wow, what a week. Green, big green, except the NASDAQ. But look at the Dow, almost at 3% last week. S&P 1.5%. Of course, all this euphoria is attached to what? Tax reform. We'll get to that in a minute. Now, let's go to the big charts. First up, we're gonna start where we did a couple weeks ago before our break. And yes, when the Dow theory, you're looking at the Dow and transports hitting all-time highs together, very bullish. Well, here, it has been ugly until last week. Boom, 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 straight up with the transports last week. And yes, we hit all-time highs together. Very bullish indeed. Looking at the S&P daily chart, looks good. Consolidation breakout, and that's exactly what we had last week. Another breakout after consolidation. Momentum, MACD, as you see below, it is pointing up, very positive. RSI, relative strength, a little pricey, getting a little bit overbought, but that's not uncommon. We saw it last month, sustain that for about 6 weeks, and with the S&P futures up big this morning, probably will continue. Next weekly view looks fantastic, right? Straight bullish line up, momentum at the bottom, crossover to the positive side. I mean, all looks good here. A little bit overbought again up top, but not uncommon. So another good looking chart that tells us we're gonna continue to extend this. How about this chart? Let's go back, way back, okay, to 29. It is seen over time that we have these long periods of consolidation, 29 to 50, breakout, 70 to 82, huge breakout. And the reality is, when you look here from 2000 to 14, that's a consolidation. So here we're breaking out from a long-term consolidation. So maybe it is just the beginning. Now, if you take a closer view, here it is from 2000 to 14, right? From 2000 to 13, we average about 1% a year. That's it. Through 14, about 3%. And now we're just breaking out of that after really a 20-year consolidation. So when you look at it from a technical standpoint, we could just be getting started. How about the NASDAQ? Same view, as we said, a little bit tough last week, not unexpected. And again, NASDAQ up big time year to date. So we had a little bit of a pullback, a little bit of profit taking last week, not unexpected. And then at the bottom, you see momentum going down. So when you look at the long-term view, same thing. Here's your weekly, looks beautiful, straight up, very bullish trend. How about the long-term view? Same thing, right? We had a 16-year consolidation, so we are just breaking out of that. And again, a very bullish long-term signal from a technical standpoint. How about market breadth? We've been talking about this and how bad it's been. Well, guess what? It looks great now. Here's our 200-day moving average, okay? So those companies above their 200-day moving average. When you're above 60, very bullish, and you can see it right here. I mean, S&P, 80%, NASDAQ, mid-cap, and smalls, all 70% or above. Very good looking. And then your 50-day, which is a shorter term view, obviously, it still looks great. S&P 80, you've got NASDAQ a little bit weak there, but again, small and mids really making a move, so that is very positive for the markets. International, here's your FTSE. okay? Very bullish, great line there. Although we are seeing some cracks around the international markets. Here's Germany. We've seen a pullback in Germany. Let's see if they can hold that blue support line. Hong Kong, same thing. We've had some consolidation here, a little bit of a breakdown to the downside. So let's see if we hold that 20-day moving average and where that goes on the international side. Now let's get to our sectors. Whew, I feel like I'm really going fast today, but want to make sure I get it all in. Telecoms, we talked about this 2 weeks ago, coming alive from the dead. Tiptoed into a couple names a couple weeks ago, and so far it's worked out pretty nicely. So why do we look at the charts? Why do technicals work? I've overlaid the Fibonacci retracement here. Example below what that means. And look at our first level there. We hit it, stopped, and came back and consolidated. So that tells you why these charting tools work. Okay, here I think we've had a nice, really nice run up in telecoms. You're going to pull back here. We're either going to consolidate or look for a bullish flag before breaking out again. So if you haven't gotten in, this is a nice place to look for some future opportunity because we got a way to go. One of the few sectors that is not overbought. How about oil? Same thing. Here we've broken out of a long-term consolidation. Been tiptoeing in here as well with some clients' accounts. But when I look at it, obviously we broke out, had a little bit of a consolidation pullback, broke out again. So we are testing, but you're seeing higher highs, higher highs, higher highs. Very bullish sign. But what am I looking for the next leg? Here's a chart that shows you oil relative to the S&P. So who's performing better? Obviously at the far end of the chart, you see it really, oil getting crushed compared to the S&P. And then it's kind of meandered along there. And then you see where you are now. Now you see that trend line? If we break that trend line, we did, but we're coming back and testing it right now. If we break that and go a little higher, I think it's time to definitely look at oil in a more serious manner as we go into 2018. Treasuries, big story here continues. When you look at treasuries, right, you see our high for the year, you see our low at about 215. 245 seems to be the number right now, so we are continuing to tick up a little bit higher, but the big news is the spread. 10 years minus 2 years. We're down to 0.59%. That is the lowest yield spread since before the crash. So again, the bond market is telling us a different picture and to be prepared. So at this point, we're not seeing it on the equity side, but obviously when you look at the bond market, it is telling us something different. So is this the end of the bull market? Well, obviously I just showed a lot of charts that say otherwise. But why do I feel that, wow, this could be the end or the final topping, if you will? First off, my gut, right? I mean, sometimes you have to live by that, right? Coaches, whatever the case might be, when you look at certain things. I mean, last week my gut said it was time to start selling some of the big tech names at certain sectors, right? And it worked out okay, right? So that's number one. But you look at what we talked about at the beginning. Political risk, right, wrong, whatever. I'm not getting into the political side, but obviously we saw some political risk last week. Geopolitical. When you look at the stuff going on in North Korea, right? Their most recent bomb can now reach New York City, okay? That's a concern. Syria, some more bombing this weekend. So there's a lot of geopolitical stuff going on, okay? And then the tax plan. I think the tax plan, personally, at this point, I am not impressed. I don't see it. Everyone's saying it's going to drive. Obviously, there's been a lot of reports out, a lot of economists. They're talking about a driver of about 0.3%. We're counting on big corporations to save money and create jobs? I don't know. I don't really see that, right? Are they going to get more money and just do more buybacks, or are they actually going to expand? We'll see. So I do have an interview set up more on the tax plan. So also, you know, when I look at all this stuff going on, how about consumer confidence? All-time high outside of 2000, okay? Everyone's giddy. You know, again, it's kind of a contrarian view. Again, we showed this a couple weeks ago. Everybody's all in. I mean, look at that. Money continues to flow into this market, even at these levels. And then you look at the feel of things out there. Here's one of those commercials from one of the online traders. The dumbest guy in high school now has this huge yacht, right, and is so successful. Of course, you know, I find that a little bit offensive, and it kind of reminds us of that baby that was trading, right? I mean, folks, it's not that easy. It isn't. Okay, I spent hours and hours and hours, and making it look easy is silly. So there's a lot of things that make me uncomfortable. And I'm going to go back to one of the classics, Sir John Templeton. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. Wrapping things up, AAII, here's the consumer, individuals kind of in the middle here, fear and greed up to 70 last week. At this point, you know, we are all in, our signals are positive, but I really feel this is a good time to take a step back, take some profits, and I know a lot of folks hate this. It's time to get nimble and see what's going on. As we head into next year, we'll see where we go. As always, we appreciate you watching. This is Michael Loftus for Wealth and Wisdom TV.